Investors tend to overreact, which is understandable, right? These are unprecedented times, and these events do sort of introduce a lot of uncertainty in the market. So it's understandable why the first response from investors is to try and I guess pull away from the market. But as long-term investors, we think that the best way to sort of play this out is to remain invested and just see through. What we've seen is that SA is pretty resilient. And from just our read of the budget, it was very conservative in the sense that they didn't price in the high commodity prices. I mean, we've seen gold and platinum rallying over the past year, and Treasury took a very conservative stance. I think my worry with this is that if it continues, you're likely to see oil prices remaining high, inflation remaining high, and then maybe the SAP then won't cut as much as it was planning to cut, and maybe they'll start increasing interest rates. And I think that will maybe change the dynamics from what we're expecting, which was low inflation, low interest rates. And of course, as you know, you want low inflation, you want low interest rates, as they mean that the cost of borrowing is low. If you investing in infrastructure projects, you also want low inflation because you're borrowing most of the time. So the lower the interest rates, the better. We think the budget was very conservative in the sense that, as I mentioned, it didn't factor in the revenue windfall from high commodity prices. We're very positive on the fact that it showed that debt to GDP levels are going to peak this year, which means that going forward we're likely to be in a more favorable position in terms of our debt levels. So generally we think we are in a good space, and we think this is likely to be reflected in the credit rating agency's opinion of the fiscus. And we've seen last year already, we've seen that credit rating upgrade from S&P 500. We think that even this year we're likely to see favorable commentary from rating agencies. So overall, the country's risk has declined, which is a great thing. You know, it means if the country is borrowing, it's borrowing at a lot cheaper rates. The rand is likely to be supported as a result. So we do think that the budget was extremely favorable, although there were not a lot of surprises. But I guess that's what you want, right? You want some sort of policy certainty and stability, and I think this budget definitely gave us that. I think our growth story has improved drastically compared to a few years ago. You know, you speak to clients and you have a positive story to tell, unlike in the past. And I think the growth is mainly going to come from some of the structural reforms that have been put in place. Energy supply is definitely not an issue anymore, as we're all aware. We know that they're busy fixing or unlocking bottlenecks around our ports, around our rail. So we think all of those will definitely be supportive of growth, and this will show up in the numbers in terms of revenue numbers. For example, sticking to revenue, initially last year at the MTBPS towards the end of the year, there were talks of increasing tax to show that the country is on a positive trajectory. In this budget, that expected tax increase wasn't there anymore. And what this should tell you is that SARS and National Treasury are comfortable that the country is collecting enough tax, and this will definitely support growth, and also the revenues will be supported by growth as well, because these things tend to feed into each other.